In today's powerful episode, we are going to be talking about how to make $1,000 during a bear market when the markets are crashing. Take a look at the markets at this particular moment, right? Everything has been going down for the past 1 month, and people have been struggling to make money. The method that I'm going to show you is going to help you utilize motive waves, corrective wave structure, and you are going to get to your target, which is $1,000 US. So what I want you to do right now is put on your big boy pants. Make sure you watch till the very end of this episode, because what I'm about to show you is going to be life changing. So one thing that I want you to look at is, in this instance, we're going to be looking at Bitcoin as an example. Take a look at this. So many trading opportunities. So we ended up dropping from around 126,000 US dollars, and we have dropped so far by about 35%, almost 40%. This has obviously happened since the 25th of October. Okay, so if we look at this particular level, this was actually the 7th of October. So since the 7th of October, we've dropped by about 40%. So if you divide that, you can easily make a 10% each and every day. And of course, the markets were not clear until we made this particular double top right over here. So this market structure was the giveaway. It was the ultimate signal that we were now beginning to have an aggressive downtrend as far as Bitcoin is concerned. So realistically speaking, we dropped by about 30% since what time frame was it? Since the 27th of October. So 27th of October, and today is the 25th of October. So each and every day we've dropped by about 1% on average. So 1% on average, if you're using a 10x leverage or a 3x leverage, this is a significant amount of profits that you could have been making on a daily basis. But before we get into that, right, I want you to understand something about motive waves and corrective wave structure. In order for you to sort of take advantage of these trading ideologies, trading identification ways, you have to understand what these are. So, for example, if you reach this level of making $1,000 per day, right, you have to have an elite type of technical skill, technical analysis skill level. And by the way, before we get into making $1,000 each and every day, right, first of all, let's talk about how much money exactly is required in order for you to be able to generate $1,000 per day. One thing that you have to understand is we are going to be dealing with risk. Risk is a big factor. Risk to reward ratio, your R to R status, and the ratio that you're supposed to be considering. Now, one thing that you have to understand is, if you have a small amount of trading allocation, which is your capital, you are going to be facing a higher risk. This is going to be a greater risk in comparison to somebody who's trading with a slightly bigger budget. Okay, so the ideal scenario, in order for you, I mean, let's just be realistic here. Okay, for 1 second, be realistic with yourself. Where in the real world would you be able to make 100% profit in less than 24 hours if you invested $1,000? Let's be realistic. So trading is a business. Okay, now I'm getting a little bit aggressive and a little bit pissed off right over here, because a lot of you have got very weird expectations, and you want the digital world to give you unheard of results. There's nowhere in on earth where you can invest $100 and in 24 hours it spits out $1,000 in profit to you. That is one thing that you have to understand. Okay, now that we've got that out of the way, it is better and much more realistic for you to invest $10,000 and be able to generate $1,000 in a day. If you're only trading with $1,000 and this is all your capital, right, it wouldn't be a wise decision for you to be trading all of it and facing 100% risk in order for you to generate $1,000, $100 per day. So what you would do if you had $1,000 as your capital, making a $50 to $100 would be much more realistic. Okay, that's one thing you guys have to understand. So this is one of the reasons why I would prefer people who are interested in this methodology to at least have a minimum of, 10,000 US dollars. If that is very, very hard to do, then having a $5,000 would make some sense. If you've got a $5,000, you can make 10% per day. So what I'm aiming for on a daily basis is at least generating 10%, 5 to 10%. If you are able to lock in 5 to 10% profit, right? And of course, with this method, you have to go a little bit aggressive. So that means you have to utilize all your capital, because you're trying to generate this 5 to 10% profit. And it's a very safe type of trading, because you are not going to be using leverage. So there's going to be no leverage whatsoever. So this method that I'm about to teach you is only going to be dealing with pure spot trading. So we're only going to be trading spot. So with spot trading, of course, you have to have very good precision, and this is one of the reasons why you have to pay close attention. So buckle up, because now we're about to get into some real proper stuff that you guys came for. So I hope I dispelled all the doubts, and now you understand what type of level we are on. Okay, so getting back to the motive waves are very important, because they're going to help you to trade the trend. If you have a downtrend, right, the motive wave are the waves that are going to be able to give you a very good chunk of profit. For example, let's go to BTC. These structures, right, these movements are motive waves, and they gave us the best profits. Okay, so take a look at this. The first motive wave, technically speaking, was this chunk right over here. This is 28% in profit. So if you were able to identify it, you could have done very well. And moreover, if you guys are sort of confused by these terms and jargons, a motive wave basically just derives from Elliott wave methodology. So when it comes to markets, right, there are trending markets, and there are corrective structures, corrective markets, where the price sort of has a very tight level of bouncing back and forth in a specific period of time, and then what happens is the price continues going in its intended direction. Okay, so if you are having a downtrend, right, the motive wave is going to be very juicy, it's going to be very fast, it's going to be the most lucrative one. And then you have a corrective wave structure, and then it continues. At some point, there's going to be a sell exhaustion or a trend exhaustion. Then it's going to sort of do this and then figure out the next direction. So depending on if you're receiving more buyers coming through at this level, the price is obviously going to reverse. If more sellers get in, the price is going to continue towards the downside. So one thing that you have to understand is, first of all, figure out what type of market conditions are you dealing with. Are the sellers overwhelming the markets, or are the buyers overwhelming the markets? If the sellers are overwhelming the markets, right, you're going to have a scenario like we had, and there's going to be a downtrend. So basically, how do you get to figure out the sellers are overwhelming the markets? Number one, look at these trading indicators. First of all, you've got a VWAP. So let me just share with you if I'm going to be able to get that information. So basically, a VWAP is a volume weight added price. So VWAP indicator, do your Googles and add that to your trading view. So basically, this is a VWAP. this is going to be the line that you're going to be following. So right now, the yellow line that you're seeing in my chart is a VWAP. So usually when the price is being rejected and trading below the VWAP, it shows a slow momentum turnaround, and there's obviously going to be a lower price. In situations where the price is pumping towards the upside, right, it always trades above the VWAP. So in this particular case, the recent situation we had with Bitcoin, we had a VWAP which was acting as resistance. So VWAP is going to be one of the best indicators that you're going to be using, and you're also going to be looking at the point of control, the POC, these bars that you're seeing right over here. Every time you go to a point of control basically is the highest traded nodes in a particular trading session. So these usually act as resistance. For example, do you see this trading node right over here? We had a lot of contracts. So first of all, you have to look at the basics. Buying and selling is consisting of different contracts on a particular trading session. So if a lot of sellers are selling at a particular level, right, there's going to be a lot of pressure which is going to be applied, and the highest number of contracts are going to be either dominated by the buyers or the sellers. For example, in this particular case, right, we had a lot of selling volume pressure. Can you imagine? Maybe you had 200 million US dollars worth of selling contracts. This is going to be reflected in the chart. So as you can see, the point of control is like this. The most protruding level, okay, is going to consist of the highest contracts, the highest either buying or selling contracts. So in this particular case, right, we had the highest amount of selling done between 115,000 US dollars to 110,000 US dollars, therefore being represented by the red line. So if you go to different time frames, right, you go to the 24-minute time frame, you're going to see this selling pressure coming through. So the most recent selling pressure that we had was at 91,000. 91,000 had a lot of selling pressure. So these nodes right over here are very, very vital. So this is one of the reasons why you always have to have a point of control indicator, POC volume indicator, point of control. So the point of control is going to be very, very important. So add this indicator to your profile, and you guys are going to be able to see what's going on. And moreover, take a look at this. The recent downtrend that we had, right, is actually getting some momentum right over here. This is a corrective wave structure. Okay, by the way, I'm going to get to the corrective wave structure because right now we're just mostly talking about the motive waves and how to identify them. Okay, so the reason why you're looking at the VWAP, the point of control, is so that you can be able to determine which motive wave is about to be formed. Okay, because if you identify that, okay, we're going to have loss in momentum and the trend is going to go towards the downside, what would you be doing? You would be shorting the markets. When you short the markets, this is obviously going to allow you to scoop and grab a lot of profits, because you are able to trade with the trend and you're going to be trading the motive waves. Okay, if you trade the motive waves, this is obviously going to be able to give you the highest amounts of profits. Just like you guys can see, trading the motive waves of this particular recent downtrend that we had could have made you a lot of money. So identifying the motive waves and identifying when the motive wave is about to lose steam, because a lot of you guys usually end up skipping a trade and then the price reverses, you get shaken out, and then it continues. So you guys usually, let's say for example you managed to get in around this particular level. Yeah, the trade was going very well, but you didn't take profit, and then the price retraces, you get scared, you're like, oh my god, it's going to come back to my entry, and then you get out of your trade, you only make a minimal profit, and then the trade continues towards the downside, and then you miss most of the trading session that you could have heavily benefited from. So this is what usually happens. So this is one of the reasons why I talked about the corrective wave structure. Understanding where your targets are going to be. Okay, once you are able to identify where your targets are going to be as far as the motive wave exhaustion, because at some point the motive wave is not going to be as lucrative to trade, because there's going to be a corrective wave which is going to come through. There's going to be this particular bounce that you do not want to encounter on your way down. So you exit the markets. If you want, you can even put in a long. If you put in a long, you get to make some free cool profits. Like for example, this one was like a 6%. 6% is, reaching your 10% target, because if you are trading with the 10,000 US dollars, you only need to make 10% profit. So if you are able to trade a corrective wave structure, which is giving you a 7.1%, right? This is very good. You're going to be able to reach your target of making $1,000 in a day. So once you get to do that, right, identify these motive and corrective wave structure, then you are going to be good to go. So right now, Bitcoin is having this corrective wave structure right over here. So I exited my trade, and take a look at this. We are sort of bouncing. So what's going to happen is, at some point, the momentum is going to sort of finish, and I really believe right now is actually finishing. So what we're going to have to do is we're going to go back to retest this level. So depending on the amount of buyers that we're going to be able to get, we're either going to be able to sort of bounce back and forth. Then at some point we're going to continue towards the downside if the sellers are overwhelming. So our only target, our only goal as traders is to identify if there's going to be a trend continuation. We are also supposed to identify a trend which is beginning to build up, okay? And we also need to identify when a trend is coming to an exhaustion. Basically, there are only three things that you need as a trader: trend identification, trend exhaustion identification, and trend continuation identification. If you are able to figure out these three things, you guys are going to be able to make a lot of profits. Just basically identify when a new trend is happening, when there's a trend exhaustion, and when there's a trend continuation. So as you can see right over here, the price of Bitcoin is exhausting at this level, which is 89,000 US dollars. So there's going to be a retracement towards the downside, and we are going to have more trading opportunities. Moreover, right over here, we're beginning to see something happen. So there are trading nodes that are forming right over here. So at this particular moment, we can't really tell whether these buy nodes are representing heavy buyers or heavy sellers. So what's going to happen is, let the VWAP develop. So if we look at the smaller time frame, let's look at the 24-minute time frame. If we look at this 24-minute time frame, we can clearly see that we are beginning to create a different pattern right over here. However, we still face heavy resistance from the top. So right now, the safest thing that we can do is exit our long from this corrective wave structure that we took, and expect the price to sort of have a retracement. So when we come back to this lower level that we reached right over here, we are going to be able to identify whether there's going to be another pump, or whether we are supposed to stay away. So wait for the price to come to this level. So with that trading methodology, right, of course, I'm like cruising, and I'm just like sort of very fast when it comes to explaining. Just get the concept, and you have to work it. You have to sort of make it a personal strategy of yours, so that you understand how to tweak it. Okay, so with this, let me not even give you further analysis paralysis, because it will be too much information. So what you have to do is, if you guys are serious about making $1,000 per day, all you have to do is email me I will give you a personal walkthrough on how you're supposed to go ham with it, and how you're just supposed to get crazy amounts of profits even during a bear market. People are milking the markets because basically, if you really get to think about it, a bear market is just a bull market in reverse. It's just an inverse bull market. So for us, each and every season is a bull market because we know how to play both games. We know how to short the markets. We know how to long the markets. Everything is as is. I'm telling you, this was a bull market for the bears. Trust me. So this is one of the reasons why you have to, get the information that I have in my head, because I've had over a decade of trading cryptocurrencies. You do not believe me? Just go to my YouTube channel and search for the oldest crypto videos that I was uploading on this particular YouTube channel. I'm clocking a decade, which is absolutely crazy. So I'm interested in helping you make a whole lot of money, and I also customize people's trading portfolios and all that good stuff so that they can become profitable. So do not waste any bull or bear market. There's always opportunities in the market. So subscribe to my YouTube channel. My email is everywhere on my YouTube channel. So figure out how to reach out to me, then we can keep it moving. Talk to you and subscribe to my YouTube channel.